What is happening, traders? I hope you are well. Now, this video is the first edition of videos that I'm going to be producing on a daily basis, giving you instruction on the comments that I asked you to give me from the previous video. So we're going to be bringing videos out every single day until all of your comments are answered. They're going to be short, sharp, straight to the point. So Lawrence asks, how do I know when the market is about to reverse? So the first thing that you should do is click the link in the description and make sure you go over to Price Action Ninja's website and purchase all of his books. It's a one-time fee for the membership, and you get all of his books. I think there's 7 books in total that will give you all the knowledge you need on how to understand the market, because this particular book discusses how to determine when a reversal is going to take place. So let's just scroll down quickly. So this is the kind of structure that you're looking for. Obviously, if you're not looking for supply and demand zones, but you can find supply and demand zones within this structure as well, right? So what we're looking for usually is 3 swing lows to form at similar prices. Now, this structure is fractal across all time frames. You see it on the H1, the 1 minute, 5 minute, 4 hour, daily, weekly. It's on every single time frame. Now, when you see this structure, you have to understand why this structure is actually happening in the first place. Because just saying the structure and me telling you that you need to look out for this structure, it doesn't mean anything to you, right? Why is it actually happening? Why is this structure taking place? This will allow you to understand it in your own mind frame, from your own perspective. So when you do come across it, you can then begin to define that in your mind for yourself. Now, understanding this, you won't recognize that this structure is actually forming until the 3rd swing low. So just remember that, because sometimes, you'll get one swing low, you'll get another swing low, and then it could push deeper, or it may not even come down to the same price. It may be a bit higher, and usually the 3rd swing low is slightly higher than the 1st and the 2nd swing low. So just to give you some insight there as well. But let's understand why this happens in the first place. Let's go down to page 8. So this is something that I've described and gone over time and time again with you guys, just so you know it's really ingrained. We're currently seeing that the market's been going down. So what does every trader think? Once the market's trending, then they think it's going to go down forever, right? So then this is when the big banks and institutions come in and decide to cause a reversal. So now that the market's going down, the banks and institutions want to reverse it. So what do? They start placing buy trades. Now, because every trader thinks the market is going down, every reversal or every pullback is an opportunity for them to get back in to the downside. So then this reversal is just the banks and institutions taking profits off their trades. But what are retail traders doing? They're placing more sell trades, which is then giving the banks and institutions liquid to then place more of their buy trades. They take profits off again. It's given the banks liquidity, put traders coming into the downside. They place 10,000 more buy trades, and boom, the market moves off to the upside. So let's just have a look at this on a very few different time frames. Let's have a look at this on the Euro Yen. We can see this taking place on the daily chart over here. We can see we've got 3 swing lows here, and then the market moves off to the upside. I don't know how many pips after that. Let's go from that low. Oof. Around 24,000 pips. Insane. Insane, right? Let's go to the USD Yen, where I found another example for you guys. Okay, so here we are on the USD Yen. Again, the same structure on the daily charts, right? 3 swing highs, and as we can see, we've got this high at the same level. Let's just zoom in a little bit more. We've got this high reaching the same level, and the 3rd high slightly lower. But what's this high gone into? A really, really decent supply level at the extreme of the current market price, right? So your 3rd swing low, if it falls into a daily supply or daily demand, it's a really, really good sign that you should play the event chain at that point, if you're there to actually see this play out. Let's take a look at another market on a lower time frame. So here we are on the USD CHF, and as we can see here, we've got one to the left here that only has, whoops, got one to the left here that only has 2 swing lows. Again, you can see that sometimes it doesn't do that, but what that has fallen into is an H1 demand zone, and then potentially you could have played a 5-minute or 15-minute event break and then taken that to the upside. If we move further to the left, we can see here also that we've got 3 swing lows here forming at similar prices, and then the market decides to move to the upside as well. And sometimes it does this as well. Sometimes the left one will be slightly higher than the second swing low, will go slightly deeper, and then the third swing low will be slightly higher again and move up. But usually the third swing low is usually higher than the first and the second swing low. So Lawrence, I hope that answers your question. We are done for this video. I'll see you tomorrow.